It's January 3. Welcome to Business Incorporated. Thank you for joining us. I'm Chimizie Obi Iwago. On the show today, oil price hits almost $70 after U.S. airstrike kills Iran and Iraq officials. Egypt holds domestic fuel prices steady. Plus, in our year-end report today, our focus is African agriculture in 2019 as the sector reaps harvest in changing climates. Well, we'll get the show started with the markets, and here on the African continent, the Nigerian stock market was taking the shine at intraday today, thanks to a 0.21% increase in the all-share index at about midday. The South African JSE index had tracked from previous gains at intraday with a 0.22% drop. In Egypt, the stock market is closed for the week, but the blue chip index fell 0.44% on Thursday as most of its shares ended lower after the exchange data showed foreigners were net sellers of Egyptian stocks. The Kenyan market also ended Thursday's session down 0.26%. Meanwhile, major Gulf stock markets are closed today, but traded positively on Thursday, moving in line with oil prices and global stocks. That was also before news broke out about a U.S. airstrike killing key Iranian and Iraqi military personnel, Soleiman. In Abu Dhabi, the index was up 0.48% as the United Arab Emirates' largest bank, First Abu Dhabi Bank, and telecommunications company Etisalat both gained 0.9%. Dubai's main stock index edged up 0.15%. Qatar's index gained 0.83%, led by financial services shares. In Saudi Arabia, the benchmark index rose 0.46%. In Europe, stocks traded lower on Friday morning as geopolitical tensions spiked after U.S. airstrikes in Iraq killed a top Iranian military commander. Let's see how this is playing out in Europe today. Let's talk to Ulrich. Hello, Ulrich. Good afternoon.
Good afternoon to you.
So U.S. airstrikes in Iraq killed a top Iranian commander, and that has heightened the geopolitical tensions. Oil prices have surged in the first reaction. How are the European markets coping with the news?
Yes, they are going downhill, and they're not crisis share prices yet. One trader was quick to insist when the trading started. The losses have gotten bigger over the day, regardless of where you look. Here in Germany, actually, they're more pronounced than in most other major European markets. The DAX is going down by about 2%, this after it started the year with a nice gain. The CAC 40 in Paris, it's going down by over 1%, but the FTSE is going down by just 0.5%, and Milan is also losing by more than 1%. I think the DAX is affected on the one hand because it has a lot of export-oriented shares, and with the oil price rising, oil is one of the major contributors to economic welfare, or the opposite of it. As oil prices rise, great for producers, producer countries, and companies that produce, but not for the customers. China is a big importer of oil, so people are fearing that this, if the conflict continues, will have an effect on the oil prices continuing to rise. The shares that really stand out in the European market are those from airlines. Why? Because airlines tend to lose more than others if the oil price goes up suddenly, unexpectedly. Jet fuel is their biggest variable expense that they have. And when you look at the damage here in the market, Lufthansa is going down by over 7.5%. That has nothing to do with the strike that earlier was a burden for the share. This is oil, this is Iran and the US. And Air France, KLM also going down by over 7%. EasyJet and Ryanair also losing more than the average, but not as bad as the two big ones.
All right, you seem to have mentioned some of the individual shares now and how they are reacting. So which one of them are especially sensitive to such news from the Middle East?
I think those would be the airline shares, but I think also down the road, if this continues, anything to do with using oil in day-to-day activities, it could translate all the way down to the car shares, where of course if the prices at the fuel pumps go up, investors or buyers, consumers, car buyers, will think about what level of car they can still afford, and also of course the big chemical industry, which is a huge user of petroleum and making its products, plastics, you name it, for all sorts of uses in business and everyday life. Along with the airlines, there are plenty more businesses which will be impacted if this stays a topic. Whether it stays a topic, I don't think anybody can really reliably predict the situation as there's an escalation today, how Iran will counter this, and how the United States, how Donald Trump might react to the reaction.
All right, give us a preview of this special trading week. Next week, back to normal. What events will traders in Europe be looking out for?
Yeah, certainly the further development in Iran and with Iran in the Middle East, but also the trade deal. And this, I think, could be a mitigating factor in limiting the kind of damage in the markets, because everybody's looking forward to a trade deal in mid-January. And I think you have to expect further statements one way or the other, how it's developing, and perhaps even some sort of preview how it would continue beyond phase one with phase two. Some saying it will take quite a while. Perhaps until the November election, but people will be looking for statements from both sides in order to get a picture of that. Also, basically, the world gets back to normal. There are events that take place again, and one major event starting at the beginning of the week, the CES, Consumer Electronics Show in Las Vegas. It's gone way beyond electronics. Basically, anyone in the business world has to be there. There'll be lots of industrial companies, too, joining the ranks of Sony or Apple or Samsung. There are events, press events scheduled from the likes of Continental, the auto supplier, or Bosch, another auto supplier. Toyota, the automaker, will be there. There will be plenty of news coming from there, and I'm sure share reactions as well.
All right, thank you for your time, Orich, and enjoy the rest of the weekend.
Thank you.
And with oil prices on the rise, Britain's Tullow Oil led the charge for the oil and gas sector to climb 3.6% during morning trade. Let's take a peep into London with Juliana Olainka on board. Hello, Juliana. Good afternoon once again. Well, bring us up to speed on how the London market is moving on today on the developing story of the U.S. killing of some top Iranian commanders. Hezbollah has issued a statement saying avenging Soleimani's killing is a responsibility of resistance worldwide.
Well, good afternoon, Chimmy. If World War III is trending on Twitter, that's never a good sign for the equities market. Of course, we've heard from Iran saying that this is a declaration of war, that they will be seeking vengeance. We've had a lot of other international players, regional and also Russia, saying that, this is going to see a rapid escalation in the Middle East. And the equities market is worried. Of course, we have discussed with Orich that oil majors are doing really well at the moment. Brent crude oil, the last time I checked, they were up about 4%. And that's really because of the strategic positioning of Iran. That Strait of Hormuz, which, covers about a fifth of the world's oil supply, has been attacked in the past. We know that last year there were two boats that were seized allegedly by Iran. So there are a lot of fears and a lot of worries. The equities market in London at the moment not doing that badly because, of course, oil is doing really well and they typically dominate the FTSE 100. The all share at intraday is down 0.51%. The FTSE 100 is down 0.48%. And the FTSE 250 is down 0.88%. In currencies, the British pound just down on the dollar by 0.49%, down on the euro by 0.15%, and down on the Japanese yen by 0.97%.
Well, on High Street, Next says Christmas sales are expected to boost the company's profit forecast. Any idea of what the figures might look like?
Well, Jimmy, popular UK retail chain Next has done it again. They kind of beat the odds last year and were going way above their competitors who were struggling on the struggling British high street. But Next have said that they've had to reassess their end of year sales. And they said that their full year profit is going to rise by 5.4%, that Q4 has been doing particularly well for them. Surprisingly, when a CEO or a chairman does say that the weather has kept people indoors, it's not a good thing for retail. But for Next, their online sales are doing particularly well. So even though they're seeing a decrease in footfall in their stores, a lot of their customers are going online. They've also said this time next year in 2021, they'll be posting also some positive results. They expect their full year results at the end of the year to be up by 1%. So this is really good. A lot of people are saying perhaps this has got a lot to do with Black Friday. Next have refuted that statement, saying that they didn't even put as many sales as other retailers did in their Black Friday bargain. So all in all, good positive story for Next, for a British retailer, and hopefully the retailers across the UK will be able to pick up some of their tips.
Well, still on corporate news, there 3 energy firms are under fire, as it were, over the power cuts that happened, that was last August, that left more than 1 million people without electricity. How much are these firms going to cough out, and when?
Well, it's the tune of £10.1 million. This will be spread across 3 energy firms. Hornsey One and RWE have both agreed to pay out £4.5 million in compensation to customers, and UK Power Networks will pay £1.5 million. This happened in August last year. Early August, there was a lightning strike at 2 Winshore farms. This had a major knock-on effect to lots of transport. There were some passengers that were stuck on trains for about 8 hours. A lot of traffic light systems in the UK were also not working. And Ofgem, they're the kind of regulator that look after energy firms. They said it's not acceptable that even if there was a lightning strike, that these energy suppliers should have been up and running much swifter, much faster. And really what they're doing is they're sending out a message to these companies that no matter what the weather, UK must be at the top of its game when it comes to being the best in the world at giving great electricity.
All right, Juliana, well, it's the last one for the week, and the year promises to be great. So I look forward to seeing you next week. Enjoy the rest of the weekend.
Thank you.
And major markets in Asia were subdued on Friday as investors weighed the impact of an escalation in Middle East tensions. The Hang Seng Index in Hong Kong slipped about 0.2% as of its final hour of trading. Mainland Chinese stocks were mixed on the day. The Shanghai Composite was slightly lower at about 3,083 points, while the Shenzhen Composite was 0.267% higher at about 1,760 points. Elsewhere, South Korea's Kospi closed fractionally higher at 2,176 points. Australia's S&P ASX 200 rose 0.64% to close at 6,733 points, with all the sectors in positive territory. Markets in Japan were still on holiday. And in U.S. stock index futures were sharply lower on Friday morning after the U.S. confirmed an airstrike that killed a top Iranian commander. At around 4:40 a.m. Eastern Time, Dow futures dropped 114 points, indicating a lower open of more than 114 points. Futures on the S&P 500 and Nasdaq indices were also lower. U.S. equities rose to all-time highs on Thursday on the back of a strong performance in the tech sector. However, the optimism entering the new year seems to be fading amid geopolitical tensions. Meanwhile, in terms of data, there will be ISM manufacturing and construction spending numbers at 10 a.m. Eastern Time. Investors will also monitor the release of the latest Fed meeting minutes due at 2 p.m. Eastern Time. There will also be a number of Fed speeches throughout the day. The global oil markets, Brent crude futures jumped close to $3 on Friday to their highest since September after a U.S. airstrike killed key Iranian and Iraqi military personnel, raising concerns that escalating Middle East tensions may disrupt oil supplies. Brent crude futures jumped nearly $3 to hit a high of $69.16 a barrel, the highest since September 17. The front-month Brent March contract was at $68.25 a barrel, up $2. U.S. West Texas Intermediate crude futures rose $1.76 to $62.94 a barrel. Earlier, it touched $63.84 a barrel, highest since May 1. Oil prices were also lifted by China's central bank saying on Wednesday it was cutting the amount of cash that banks must hold in reserve, releasing around 800 billion yuan in funds to shore up the slowing Chinese economy. And after the break, we look at the outlook on South Africa's economy and, of course, our year-ender, which focuses on agriculture. To stay with us.